Over the past 2 months, the shares of Reliance Industries RIL have remained flat. On the 29th of February, the shares closed at 2,921.6 rupees, while on the 29th of April, the shares closed at 2,927.5 rupees. However, during this period, the shares touched a record high of 3,024.9 rupees on the 4th of March, but the shares have been struggling for further gains. Nevertheless, the fourth quarter results released on 22nd of April were robust. So, what exactly was special in the fourth quarter results? What is happening in the company's O2C, which is oil to chemical business? What is the status of the company's expansion plans and debt? What targets are experts and brokers giving for the shares after the quarterly results? And should you buy these shares? Let's understand all this through 9 points. First, let's talk about the highlights of the results. RIL's fourth quarter results were in line with market estimates. During the quarter, consolidated profit fell 2% year-on-year from 19,299 crore rupees to 18,951 crore rupees. However, quarter-on-quarter, profit grew 10% from 17,265 crore rupees. The company's revenue rose from 2.25 lakh crore rupees to 2.37 lakh crore rupees. EBITDA, which is the operating profit, increased from 40,656 crore rupees to 42,516 crore rupees. However, the operating margin declined quarter-on-quarter from 18.1% to 18%. Number 2. Let's discuss what is happening in the O2C segment, which is the largest business segment. Due to improved realizations in transportation fuel and an increase in volume, the O2C segment's revenue grew 11% year-on-year from 1,28,633 crore rupees to 1,42,634 crore rupees. EBITDA increased 3% from 16,293 crore rupees to 16,777 crore rupees. But quarter-on-quarter, EBITDA grew 19.3% from 14,064 crore rupees. Similarly, the operating margin increased quarter-on-quarter from 10% to 11.8%. The performance, which is number 3, of consumer-centric business Jio and Reliance Retail was also robust. First, let's talk about Reliance Retail. Due to good growth in consumer electronics and fashion and lifestyle, the fourth quarter revenue grew 11% year-on-year to 76,627 crore rupees. The operating profit increased by about 18.5% to 5,829 crore rupees, and the operating margin improved from 7.1% to 7.6%. During FY24, the company opened 1,840 new stores, taking the total store count to 18,836. Number 4, regarding Jio. In the fourth quarter, profit grew 11% year-on-year to 5,337 crore rupees. Revenue also increased 11% from 23,394 crore rupees to 25,959 crore rupees. ARPU, which is average revenue per user, grew 1.6% to 181.7 rupees. The company's subscriber base grew from 43.93 crore year-on-year to 48.18 crore. Number 5. It's also important to understand the debt situation. The company has reduced its debt not only on a year-on-year basis but also on a quarterly basis. Compared to 1,25,766 crore rupees at the end of March 2023, the company's total debt stood at 1,16,281 crore rupees at the end of the financial year ending on March 2024. Number 6. Now, let's talk about capacity expansion. After the fourth quarter results, the company's management has talked about moderation in future capacity expansion expenditure. This means that capex efforts will start showing the results, and further capacity expansion expenditure will come from the company's internal cash generation, which is expected to increase gradually. Moving on now, let's understand what targets brokers are giving after the results. With the expectation of a reduction in capacity expansion expenditure and an increase in telecom tariffs, brokers' confidence in the stock has increased. Analysts believe that concerns over debt are not as high as projected and debt will gradually decrease going forward, meaning the growth outlook is better. Domestic brokerage house Nuvama has given the highest target of 3,500 rupees for the stock. Macquarie has still maintained a neutral rating but raised the target from 2,560 rupees to 2,630 rupees. Number 8, it's also important to look at experts' opinion. According to Arun Mantri, founder of Mantri Finmart, from an investment perspective, RIL stock is good. However, a decline towards 2,850 rupees will be an excellent buying opportunity. In the coming weeks, the stock can achieve a target of 3,050 rupees and above 3,300 rupees in the medium term. Jio Financial's performance will be crucial for the company. And last but not the least, number 9. So, will RIL stock touch a new record high again? The answer is definitely yes. But one should wait for a decline to make fresh purchases. In the medium term, the stock can deliver returns of more than 10%.